Hey, what's up, guys? Aaron Bennett here. I am going to talk about the NovaWulf Twitter Spaces that happened yesterday. I just released the entire Twitter Spaces with a heck of a lot of timestamps if you want to watch it in the totality. But what I'm going to do is just go over what happened, let you guys know the big highlights from the Twitter Spaces. They did cover quite a lot, and there were a lot of really, really great questions that creditors asked them. And also, this is not a green screen. I am officially out of jail. I'm out of prison. I am, as of now, it will change, but right now I am not in a coffee shop, which is always nice. So yeah, I will let you enjoy the good background of this little place that I'm staying. So they talked about the term sheet that will be hopefully done by March 1st. There's a hearing on March 8th. That is going to be before Judge Glenn. End of March, they hope to file a full plan and the disclosure statement, which they say will be several hundred pages. And in this statement, which I'll cover later in this video, this is where they will let people know exactly how much liquid crypto people in Earn will receive, at least their initial distribution. So people were asking them in this Twitter Spaces, but they said they can't get into specifics for how much people will get back immediately until that disclosure statement is released. So they started talking about retail clawbacks and preference actions, basically going after certain people. Now I want to take you to this tweet, which I will just share in this video. Jason New, so he was the main guy on this space. He says, to quickly recap, we, meaning NovaWulf, meaning the plan sponsor, we are not in favor of retail clawbacks. So he is saying basically that this is the UCC wanting to create this litigation trust, which I think there is good reason to create this trust, but also use that to go against non-insiders. And Jason New says, we are not in favor of retail clawbacks, which they do talk about more later in this Twitter Spaces. And then they talk about these supposed conflicts of interests between White & Case, NovaWulf, TerraWulf, and I believe Beowulf, which I only thought was a movie. And they basically say there is no conflict of interest. White & Case actually put something out through the court, which I covered, I think, in a video a few days ago, saying that, yeah, there was some interaction between them, but there isn't anything that is a real conflict. NovaWulf says that they are not in any communication with Alex Mashinsky or any of the other insiders, and I believe they said that they have never talked to Alex, Daniel, or Nuke, and that there again is just no connection there. They then go over their history with distressed investing and also the extensive TradFi connections that they have, which they say will be very important when they look for outside investors, and they feel really confident that outside investors, through their connections, will be putting money into this company, which then brings up this other point of, if all of this outside money is going to come in, why are they basically taking some of our crypto, which we don't know how much, why are they taking a lot of our liquid crypto to fund this new company? And I think some people have good questions about that. Like, how much money do you actually need to start this company? And why are you going to be taking quite a bit, most likely, of our liquid crypto? Again, we don't know exactly how much. That will come out in the disclosure statement, but that is something that I have a question about, and I think a lot of people do as well. So next, talking about CEL Token. NovaWulf believes that CEL should be at the time of bankruptcy, which is 81 cents, not this like 20 cents or whatever they had in the proposal that we all saw. I think somebody asked about returning CEL In Kind, and then they responded, and I know Simon Dixon agrees as well, that the SEC is not going to approve that. Apparently with VGX and Voyager, the SEC said, no, we're not going to allow you to give back the VGX token in kind. So CEL Token will need to be distributed in Bitcoin, ETH, stablecoin, or some combo of that. So a couple of the people on the call, Jason, Michael, and Mike Cagney, they all talked about their background, which is actually very impressive. They all have a lot of experience. They talked about why they created NovaWulf and Figure. They talked about how with their experience, they really thought that they could help Celsius, that selling these assets at the bottom of a bear market would be bad for the entire industry. And they said they looked at other Chapter 11 bankruptcies that happened. You know, we had Voyager and others, and Celsius looked the most interesting to them because of all the illiquid investments like the mining, which we've invested like 700 million or so into, the loan book, which is really interesting to them, which I'll cover later in this video as well, and also some money that Alex invested in venture capital. So there's a lot of illiquid stuff that they really thought would be great to take over and restructure. So there was a quote, and I forgot the exact quote, but they said that they want to make us, meaning the creditors, or essentially the shareholders of this company, make us multiples on our money. So I thought that was kind of cool. Basically, they want to make us more than what would actually make us whole, which would be freaking amazing if that were to happen. That would be a freaking miracle. I mean, if 5 or 10 years down the road, people have been made more whole in dollar terms, but man, imagine if crypto, I don't know if that's going to happen. That would, again, be quite amazing, but that's what they want to do. So next, they talked about the mining business, how they want to turn on these 120,000 machines, and also the staking business with the staked ETH. They mentioned new revenue sources that they wanted to create in this new co, and also having to revamp the entire infrastructure, basically saying that Celsius was managing tens of billions of dollars with QuickBooks and how that's just not going to fly moving forward. Next, they talked about something really cool. It's this toggle feature. So essentially what they're saying is that they want people in Earn to have the option of getting more equity or more of their liquid crypto. And later in the video, I'll talk about what is referred to now as an AARP class. But these are people that maybe would want to get more liquid crypto because they're older and just have different investment timelines and horizons, or they're in a different place in their life. And then there are people that honestly may want to get less crypto, but more equity. And I think that's really cool. And I think that's something that I really hope that they flesh out, because this is something where non-accredited US investors could get equity in, where otherwise, if it wasn't for the bankruptcy process, I believe they would have had to be accredited investors. And this is something that Simon Dixon did talk about over the summer when he was going over his plan, and I believe the same thing applies. And I hope that this toggle feature does actually make it into the plan. Next, they talked about the equity share tokens, the EST, how they want to bring liquidity so people can buy or sell it. I'm hoping that there is adequate liquidity. There have been some talks about maybe only institutions will be the buyers of these tokens and how much liquidity will actually be there on this provenance blockchain. But that's what they talked about, and they know it is a concern because they know that some people are going to want to sell their equity immediately into cash and get the heck out. And they also know that there may be people that are younger or people that actually like this management and see the vision of this plan and of this business that maybe will actually convert, again, this toggle feature, convert their Earn or convert their liquid crypto into more equity. So I'm hoping that, again, there's enough liquidity to do so. They then talked about the board members, the governance, and audits. Basically, they will be a fully regulated company. They also talked about the longevity of this business. And I think this really applies to people who are in loans, and David Adler is talking for the loans and they're negotiating because the maturity of their loans is 5 years. And if something were to happen in, say, year 3 or 4, then that could be really devastating for people with loans. So they did talk about, their competitive advantages and basically everything they want to do. This was kind of like a first date, as somebody said in the last question. This is the first time that NovaWulf was talking to the creditors. And again, I think they did incredibly well, and it went really, really well. It could have gone horrible. And they ran this Twitter Spaces really professionally. So next, they dove into the Q&A for the last 45 minutes. The first question that they took was from Simon Dixon. And when Simon came on the stage, he was like, guys, this was pretty brave of you to bring me up first, because other people in the past were like, hey, don't favor Simon. He's just a creditor. Like, he doesn't speak for us. But anyway, they brought Simon up first. And Simon asked, basically, would this new co, or would we own shares in Figure and Provenance? And basically, would there be an alignment of the interests of the management team and of Provenance and Figure and NovaWulf and us? And that's been one of Simon's concerns, is essentially, will they really be doing everything in their power to make us money? And you'll have to listen to their answer, but the short of it is yes. Next, we had PlanC talk about retail clawbacks and CEL Token. And I already shared what Jason New said about clawbacks. He does not want to claw back the future shareholders in their company. That doesn't make sense to anybody, basically. And insiders is something that I think most of us, if not all of us, agree that if you had insider information that the company was going to go under, then yeah, you should probably be subject to some clawbacks. But again, PlanC was saying no retail clawbacks. It would kill your business, especially if you go into retail, meaning if NovaWulf or whatever they call this new co, there actually is not a name yet. But if they go into the retail sector, no retail would ever bring money into NovaWulf, or again, whatever this company would be, if they previously basically stole money from their shareholders with retail clawbacks. So Jason New of NovaWulf, that is his name, he agrees. And he also agrees that the CEL token price should be at the price at the bankruptcy petition. Next, we have Celsius Loans. That's how he goes on Twitter. He asked about future loans, and basically, will this new co want to issue future loans to new people, or do they just want to wind down the loans that are already in the loan book? Basically, everybody that already has a loan. And what NovaWulf basically said is that they could totally imagine a future where they want to actually do crypto-backed loans and basically do what we thought Celsius was doing with the collateral, not rehypothecating it and treating it like collateral. And yeah, they said that they could actually be doing loans in the future. So right now, the existing loans from Celsius, if this plan moves forward, they would be paying, as of now, between, I think, 7 and maybe 12 or 13% on their loans. So this interest would be revenue into this new company. But if they open up to the entire crypto space and are fully SEC regulated, that would be really cool, because then other people would actually start taking loans against their crypto, especially if it was fully SEC regulated and they knew that the collateral was not being rehypothecated or being YOLO'd on some outside investment. So next, there are some questions about the management share token, or the MST, outside investors, and preference shares. Jason New did talk about bringing in outside investors into this company and getting more money to fund this company. Next, we had some talk about how the new co will be taking their fees through this management share token. And ultimately, they can't give the exact details. They said it may be a little bit complicated, but this will all be disclosed in the disclosure statement. So they basically said, yes, there will be a way that you will understand how fees will be taken, but we're not going to dive into that right now. Next, we had Jason New talk about and say that this plan is Celsius's plan and not actually NovaWulf's, which I thought was an interesting distinction. So right now, NovaWulf is in talks with the debtor, which is Celsius, and also the UCC. So a lot of what we saw in the initial PowerPoint presentation, a lot of those things about, retail clawbacks, TBD, we don't know the exact amount, we don't know the threshold, and also CEL token being valued at like 20 cents or so. This was not the decision of NovaWulf. So he said that right now, there is still back and forth between NovaWulf, between the UCC, and the debtor. Next, we had Tony bring up this AARP class, which I covered a little bit earlier in this video, saying that could there be a way for maybe older people to get out more money somehow, for them to get out more money and get less equity. Now, I don't know if they could do this legally in the bankruptcy code or if they would do this, because this would be essentially treating people who are maybe 65 and older differently than people younger. So I don't know if this is actually going to happen, but this idea of the toggle feature, I think, will happen and should happen. And honestly, I wouldn't be upset if there was a cutoff and say, hey, if you're 65 or you're 70 or you're freaking 80, maybe you don't want equity in a new co. Maybe you can get more of your crypto. So they said they'd be open to this, but they would need to look at what age groups hold X amount of the crypto, or what percentage of the claims belong to people above 70 years old, for example. So ultimately, I don't know if this is going to happen, but they said they are open to this type of thing. Next, we had Cam Cruz talk about earn customers distributions, which again, they said they can't disclose the exact amount because it is changing all the time, they said, and also that will just come out in the disclosure statement. Cam Cruz also said, like, hey, a lot of the illiquid assets is this staked ETH, this stETH, and anybody who has an ERC20 address, like we all do, could get staked ETH back. So Cam was like, hey, you know what? Like, I would love to get that crypto back, and I can convert that to ETH on my own. I don't need you to keep my crypto and use that to generate revenue to pay me dividends. I would rather just get that crypto back. So he's bringing up some good points there. Somebody then asked, will there be airdrops? Will this be treated like a DAO, a decentralized autonomous organization? Or basically, what's the structure of this? And I believe he said this will be very TradFi based, and there will be dividends being paid, and this is not going to be some DAO, some new crypto thing. Somebody then asked, is there a binding agreement right now between NovaWulf and Celsius? And they laughed, or somebody at NovaWulf laughed and said, no, as of this very moment, there is not a binding agreement. So Celsius did choose NovaWulf to be their plan sponsor, but right now they are not bound, meaning that NovaWulf is not 100% going to be the plan sponsor as of this moment. They are obviously wanting that, and they said if they don't get chosen for whatever reason, they're going to do something like a breakup fee, basically because NovaWulf has committed so much time, energy, and money into this. But right now, no, they are not in a binding agreement. And then Jason New talks about this idea of a stalking horse, which the first time I heard that term was from Simon Dixon. And right here, I will just read to you what it says on Wikipedia. A stalking horse offer, agreement, or bid is a bid for a bankrupt firm, so that would be Celsius, or its assets, that would also apply to us, that is arranged in advance of an auction to act as an effective reserve bid. The intent is to maximize the value of its assets or avoid low bids as part of a court auction. So essentially how I see it is that NovaWulf is sort of a stalking horse, meaning that this is the first iteration of a plan, and other companies may come and say, hey, we can do better, and here's how we can do better, or NovaWulf may need to do better themselves, but this is, again, not a binding agreement, and this definition says a stalking horse bid is an initial bid on the assets of a bankrupt company, setting the low-end bidding bar so other bidders can't underbid the purchase price. Other buyers can submit competing offers following the stalking horse bid. A stalking horse bidder is afforded various incentives, such as expense reimbursements and breakup fees. So Jason New did say that they would have a breakup fee if they did not get chosen. So next, we had a creditor basically ask Jason and say, hey, please don't do a cramdown method where basically you are buying enough votes, you are bribing enough people essentially with a really high payout, which is the convenience class, so that a plan that is predatory for the majority of the crypto or most people who have most of the money, which in this case would be above $5,000, they get stuck with a crappy plan. This person just brought this up saying, please don't do this. Next, we had somebody talk about their performance. Should there be a benchmark against Ethereum? Because if Ethereum is being used as an illiquid asset, basically if Ethereum goes up in value, should the management take their management fee based on the price growth of Ethereum and not actually the price growth or the valuation increase of the company? Obviously, I think that no, like you should not be taking money or the management should not be profiting just because the price of Ethereum went up, right? That doesn't make sense. So somebody brought that up. And finally, we had somebody ask a question about how they got into crypto and just kind of their background. So guys, that is it for the recap and the video. If you want to watch the entire one, I just posted it on my YouTube, so you can check that out from yesterday. So ultimately, I think that this was a very good Twitter space, and I think most people would agree. I think that they are in communication with the different ad hoc groups so that everybody gets hopefully enough of what they want where it isn't a huge problem. I like that they are open to the toggle feature of somebody wanting more crypto or wanting more equity. I think that's very, very cool. Ultimately, though, we are waiting for the full disclosure statement, which I believe they said should come out at the end of March. So we still have about a month. And that is where we will know everything from how they are going to take their fees to what the price of CEL Token is going to be, any negotiations that they will have with loans, exactly how much earned creditors above $5,000 will get paid immediately in liquid crypto. That's where they will have the threshold for retail clawbacks, and basically all the questions that people want to know. So we are waiting until that moment because it seems like they are not going to tell us those details until they disclose or they release that disclosure statement. So guys, I hope this video was helpful. I don't think this is a horrible company and a horrible plan. Ultimately, should we have done things differently 8 months ago? Sure. But we are here right now, and it seems like they are not horrendous. They are not just like the world's worst company, and it seems like they are open to communicating with us and talking with us and negotiating with the UCC and with the debtors, and they realize they don't want to piss off a bunch of their new shareholders with things like retail clawbacks, and also they want to make people happy in every category. And it would be really cool if in 5 to 10 years or whatever, they go public or they actually pay people back more than their claim. That would be amazing and awesome, and with the right company at the right time, and especially if we have another insane bull market in crypto in maybe 2-3 years or so, then yeah, I mean, that could happen. They could massively grow this company, and as long as the incentives are aligned, kind of like what Simon Dixon said, the incentives of the board and the management team are aligned exactly with the incentives of the equity share token holders, meaning yourself, then we would get to benefit from that growth. So that is it, guys. Thanks for watching the video. Till next time, talk with you soon, and bye for now.